Money FM 89.3, the best of the afternoon update. The afternoon update with Lynlee Foo.
Japan's hospitality market is back in the global spotlight. From a weaker yen to rebounding tourism and a growing appetite for long stay and lifestyle-driven accommodation, the signals are clear. Global capital is flowing back into one of Asia's most mature travel markets. But this time, it's not just about five-star hotels in Tokyo. The conversation is shifting toward emerging gateway cities, leaner operating models, and experience-led concepts that better fit today's traveller. Welcome to Industry Insight and the first of our two-part Japan special. I'm Lynlee, and joining us today is Jason Leong, Executive Director and Head of Investment and Asset Management at Frasers Hospitality. He leads investment strategy across the region and brings a front-row view into how institutional players are approaching Japan today. Jason, great to have you with us. Welcome.
Thank you very much, Lynlee. Very happy to be here, to be able to share with the audience my experiences and also about the Japan market.
We can't wait to hear your insights. Jason, Frasers Hospitality made headlines recently with the opening of Yotel Tokyo Ginza, your first ground-up property in Japan, and part of a broader strategy to grow across gateway cities. That timing seems deliberate. So why now, and what's changed in Japan's hospitality landscape that's making it such an attractive market for institutional investment again?
Well, Japan has always been a very attractive and, like your introduction, a mature and growing market for hospitality and tourism. This is actually not our first asset in Japan. We have actually other properties under the Frasers Hospitality Trust. We have the A&A Crown Plaza in Kobe. We also bought into a multi-family asset in Osaka 2 years ago. So this is not our first investment, but it's our first ground-up investment. This site is actually a car park, which we built into a lifestyle hotel and putting in a Yotel brand. And for us, when we look at an investment destination, it's always a longer-term view because real estate does take a longer gestation period. And in terms of the timing, we are quite confident with the market and the outlook of the tourist and hospitality market in Japan.
Okay. And how does this current wave of investor interest compare to previous cycles in Japan?
Well, Japan has always been an attractive destination over the last decade ago. Even more attractive in the last couple of years because it does have a lot of offering. What has changed, right, is the traveling profile. And the people who travel, you will see more tourists from Asia Pacific going to Japan, for example. Well, in the past, you have a more start towards business. We are also seeing people, especially with the changing macroeconomics and traveling profile, you see people who are digital nomads, for example. People who travel longer for leisure as well as work and stay longer in the market. So against this trend and background, you see Japan is actually a very attractive place. If you compare also, as a market, 10 years ago, 15 years ago, Japan generally, you need to know a little bit of Japanese. Now it's actually very international, right? It's easy to get around. You go to the shops, you go to any of the smaller shops, in fact, you see that you have a menu in English.
Yes.
So with all these changes and adaptation, it makes it even more attractive for many travelers to spend some time. It's also very rich in terms of the culture.
Okay. Right. And not to mention the combination of a weak yen, low borrowing costs definitely seems to be fueling that momentum. We've also seen the Japanese government ramping up infrastructure projects and promotional efforts ahead of the Expo 2025 in Osaka. The macro tailwinds are hard to ignore, right? But let's dig into that idea of gateway cities. Tokyo is clearly the anchor, but you've spoken about looking beyond the capital to diversify. So how do you define a gateway city in the Japanese context, and what makes them appealing to long-term investors?
I think from a Frasers Hospitality perspective, when we define the gateway cities, it's a very core cities with a good mix of both corporate business as well as free independent travelers in terms of their base. It serves as a hub that goes and then from where people can travel to more regional cities itself as a base. And with this definition, of course, certainly Tokyo, as we all know, as well as Osaka, fits that definition. There's also other cities like Fukuoka, right, which cater to more the southern base. But from our perspective, when we focus, we have priorities, and essentially when we talk about gateway city, is Tokyo, Osaka, Kyoto, that has, of course, very deep cultural and very attractive for many businesses as well as for tourists. And why we focus on the gateway cities, go back to our core strength, right? Where we are very good to understand corporate and free independent travelers. I'm not good at looking at resort. So, which is why I don't look at, places like Bali, for example, outside of Japan. But different companies have different definitions according to their investment thesis, their mandate, and what they want to do. So if I go back to Japan, these are the gateway cities for me. And from this gateway city, and you talk about the Osaka, where the government has infrastructure project and is growing this thing. Actually, what the Japanese government is also trying to do is to also bring people to the regions where there's also very different offering, right? So that they can attract different and repeated tourists to explore the other parts of the country that they have, right, itself. And with it, that is actually helped with our focus in the two gateway city, because then it continue to build on as a hub and spoke to actually branch out for people to go to the regional.
Okay. And are you seeing interest only from regional investors, or is this a more global capital flow?
If you look at it, actually Japan, given it as a very mature market, there's a lot of and stable, right? With the yen and all the tailwinds that is actually we are seeing in the market. Domestic capital definitely is very strong, as always been, right? They are comfortable in it. You'll find that across the board there are more people looking at the regional outside of or going further away, because there are all these positive dynamics itself. So again, depending on different companies, different strategy, but we are certainly seeing a wider, broader interest, not just from the domestic, traditionally going to the regions, but also from international capital.
Okay. Now, let's talk about formats. One clear trend we're seeing is the shift toward long stay and lifestyle-led hospitality, and Yotel is a great example of that. It's compact, tech-forward, and clearly tailored for a different kind of traveler. From an investment standpoint, what's driving this appeal of these new models?
A couple of things. If you look at it from the macro perspective globally, there's actually this trend of people looking for different products, different lifestyle, different experience, particularly post-COVID, right? Where people want to actually take the chance to experience different things. They want to experience something local, or they have, I have been in this property for years. I want to try something different. I want to meet people who are also, digital nomad, for example. So the preferences have changed overall. And in Japan, right, traditionally you find that the very traditional brand and of course the international brand, and hence there is less of such a lifestyle product. And with the growing travelers, and the needs, hence there will be a demand for something that is different and unique, something that offers something different, technology-based. Otherwise, people are a lot more, I want to be very independent. I'm very forward, I'm very into technology, and I'm very happy to be able to check in using the phone without a front-facing guest itself. So all this drive a larger trend within what we see in Japan, and it allows us, when we develop this property, it is how do I differentiate and provide a different offering in this, in a market that is growing. Hence, as we look around, who are the operators that we can partner and work with, Yotel is one of those that we started having a conversation to be at. So it's a win-win for us, because we are looking for something that is different. It's a win for Yotel, the operator, because this is their first asset operating HMA in Japan.
Okay. And Jason, do you see long stay and lifestyle concepts outperforming traditional hotels, not just in guest experience, but in returns as well as operational efficiency?
Certainly, I think the business model has a higher efficiency, for example, because if you are staying for a long stay, your needs is very different from a hotel, for example. You are staying somewhere for 1 month, for example, you don't need daily housekeeping, right? You will be out exploring. So the needs are a bit different. Hence, in terms of the manpower committed to run something that is a longer stay, is very different from something that you do a hotel daily stay where there's a lot of check-in and check-out. I would say that actually there are two parallel tracks going, right? For the short stay hotel continue to be growth, there's a lot of interest there. Occupancy is high above 90%. How many cities in the world you can continuously see a very strong occupancy for hotel? But again, if you look at also a lot of people are traveling for longer, staying longer in a city so that they can work as well, have experience the local culture. That's also a new segment that is growing, which is why in terms of the long stay, you'll find that there are people looking for such a product, but the needs will be very different from day in, day out because they are staying there longer, they are staying over the weekend, they can experience. So it will be more curated, which is why it's a lot more lifestyle. And it's not new for Japan because Japan, I think the local population are very used to renting. There's a lot of multi-family kind of assets, particularly us, the locals, may want to just rent closer to workplace, but go back to their home cities for the weekend or for their holidays. So there will be a need for different differentiation of product. And us, the world become and continue to have travelers with a very global mindset and experience different products. Certainly, there will be demand for things that are not just unique in Japan, but also a little more lifestyle driven for the longer stay.
I'm just thinking, you're talking about differentiators. In this space, would technology be a big one?
Technology definitely, as we look at, across the board, technology is definitely something that will help itself. But hospitality being hospitality, right? You still need that kind of warmth, right? Especially for something that's longer stay, which Frasers are very good at. We understand what a long-term guest, when they stay 1 month, 2 months, what do they require? In fact, a very cliche way to say it's a home away from home, right? That's cliche, but it's really that kind of community they are looking for, right? Which is why from my operating platform perspective, it's not just about space planning and building a building. It's about curating the program to cater to the needs of the clients that stay with us, to build a community, to allow people to socialize, interact as and when they want to, rather than force them. And also they have their own spaces, but we have activities curating to allow them to experience the local. And hospitality, particularly when it comes to the long stay, there's so much more because they are staying longer to work with the guests to actually help with the community. So a lot of our products, not just in Japan, but in other markets, for example, what we do is that we do activities to allow them to contribute to the local community. You can call it CSR and stuff like that, but it works both ways because it allows our guests to actually experience local. It allows the local community to benefit from all these initiatives. And it's only possible because these are people who stay longer term with us, so that we can actually pre-plan a lot of that program.
Okay. And we were mentioning emerging cities like Osaka and Fukuoka. How critical is local knowledge when you go beyond Tokyo? Is it essential to partner with local players to navigate things like licensing, land use, or even guest expectations?
I think not just Japan, but any other market, even, if you talk about, things that are market that are very transparent, like the European market or American market, actually there is a lot of local nuances that is very important, right? Of course, Japan is a bit more unique itself, but it doesn't take away the fact that across all markets where we operate, where we invest, understanding of the local business culture, the local nuances is absolutely crucial for us. And in that, of course, some markets are easier because, like for example, in Japan, Yotel is not our first property. We have a long presence for a long time in Japan, we need to understand the market. That is helpful. So Yotel is something that we take on our own, although we use a local contractor to help us, local architects, etc., to work together with us to bring this project to fruition. So it is possible in some market to go at it alone, and Japan is a very transparent market and very efficient as well. So that is possible. Of course, there's always a scope to work with people and partners for win-win, right? In whatever forms, right? And the partnership can come in terms of, again, not just about joint venture, it's about using each other expertise to grow together, right? So, for example, our Yotel, which we developed and we got Yotel to come in. This is Yotel first property, which they opened in Japan, right? They are very strong in other markets, but first stop, they benefited from our knowledge on the ground to guide them while they attract and use their sales system to attract tourists to stay at this property. And we benefit from their lifestyle kind of curation and technology-based programming to attract the right kind of clients that we want to. So it's a win-win for both of us.
Okay. Now let's move on to talking about risk. For institutional investors entering Japan's hospitality sector, especially outside the major metros, what are some of the key challenges they should be aware of?
That's a very interesting question, right? Because at the end of the day, it's really identifying what they want to do versus what they can do on the ground. So research and understanding of the market is very key, and spending enough time on the ground, and talking to people is always a necessary so-called condition to understand, and make sense of the market. Depending on different companies and their strategy, they want to focus on different things. Certainly, we are seeing interest throughout, and if you go to the regional, it may be a little bit more resort-like, right? Which doesn't fit me, that's why I don't look at that, but it may fit somebody else, right? More resort-like, more leisure-based kind of investment. What is also in Japan that is probably a lot more challenges, not just Japan, but in quite a number of countries, it is that you talk about government doing a lot of infrastructure project.
Right.
Means that actually the cost, construction cost and manpower cost is tight. Right? The government is doing things to resolve that. But you, as an investors, you do need to cater in some contingency additional for potential cost escalation, right? Especially if you are building something from scratch. That's number one. And number two is also sometimes a bit of forward planning. You see this trend now. Is this a trend that is going to continue? Because again, if you build something from scratch, it's going to be a 3 to 4 years kind of horizon from planning to building to eventually open, right? It does take some time. So you want to be very sure that if it's something new, 3 to 4 years, the demand is still there as you build on. Where we are seeing Japan right now, and this is probably not just my struggle, but what a lot of the foreign investors or even local investors find is that there is very hard to find something that is readily available, right? Because with the market dynamics right now, if you have an asset in Japan, you want to hold on to it because you are riding that wave. So or you are only prepared to let it go if you get a very good price itself. So from new incoming investors, how the economy stacks up, I think is something to think about itself. And of course, it's the understanding of the industry because you can buy an asset that's probably expensive, but perhaps there are things, what we call enhancement initiative, to rejig the room, to change the mix of the profile of the guests coming, to see whether you can get a better return. It's all returns driven, right?
Okay, well, very helpful information there. Jason, looking ahead over the next 12 to 24 months, what is your outlook for Japan's hospitality sector? Where do you see the most opportunity and what kind of investor mindset is perhaps needed to succeed?
Where do I see the opportunity is very much, I think the living, hotel and living space is certainly something that we see that the demand and the interest will continue, right, for the longer term. The business fundamentals are there itself. If I can put in money and grow the living products in Japan, I think it will be an idea. But finding something that makes sense for us, has been a challenge. It's something that we will continue to look for. It's also about the scalability, right? You want to do things that make sense and not just one or two products. That's Frasers' view, right? I want to be relevant scale. On the other side, I need to be very financially disciplined, right? Essentially, when we look at, and this is a longer term, we take a longer term view of things, it requires us not just to jump into any opportunity, but to be very disciplined in assessing the opportunity, whether it's the right opportunity for us and at the right price, and whether going forward I can do more with the asset once I have the asset. So quite a bit of consideration. So don't jump headlong in, understand the market is not absolutely ready. The opportunities to buy is not always there, right? You got to really comb harder itself, which is why I do have a team on the ground to help us in terms of control. We have partners that we work with. We have the same mindset to grow together.
So speaking of which, are you expecting more joint ventures, platform plays, or direct acquisitions in the near term?
We are, Japan is, like I said, the fundamental is good. It's certainly an interesting market for us. But whether we can do something or not, I think it depends on a variety of factors. It's the same for all the other markets that Frasers Hospitality Real Estate have a presence, right? It's all about the fundamentals. It's about the long term. I think the assessment is always the same. Being prudent, being financially responsible, and assessing and finding the right opportunities across the board. Right.
Okay. Jason, before we let you go, any red flags or watch points you see that could slow the current momentum?
Well, I think it's a lot of macro uncertainty, in the world for various reasons that's happening. I think one of the things that we are always because we manage here the real estate, look at a global portfolio from Europe to Asia Pacific. So we tend to look at the larger term macro trend and how that might impact real estate in the various countries and where are the capital flow. So it's something that we can't control. It's something you just got to be more mindful, right? Just like the interest rates, at some point, people were expecting interest rate to come down, but it is at this point, it's going to be elevated for longer, for example. So being adaptable in the micro lens is something that I think is not new. Many investors who are very experienced that will actually look at this across the board, right? Not just the country dynamics, but also how the macro environment will impact on the country dynamics itself.
Jason, thank you so much for joining us today and sharing such clear-eyed insights from shifting traveller behaviour to evolving city dynamics and the rise of new formats as well. Japan's hospitality market really is in a moment of reinvention, I would say, and it's exciting to see how institutional capital is helping shape what comes next. Thank you very much.
Thank you so much for having me here.
And he is Jason Leong, Executive Director and Head of Investment and Asset Management at Frasers Hospitality. And that's it for part one of our Japan special here on Industry Insight. In part two, we'll be shifting focus to the retail investor side and how Singaporean buyers are fueling a boutique B&B boom in Osaka and beyond. That conversation is coming up tomorrow with my guest from Savills Singapore. Until then, I'm Lynlee. Keep it right here on Money FM 89.3.
To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.